Yeah. Wow. I mean, they're pushing for that. They're pushing for that target area. So hey, let's jump over here and then we'll talk about that, and it'll all make sense. How about that? How about that?
How about that? Happy Friday, everyone.
Happy Friday, everybody. Welcome to our live profiling Q&A session. We try to do these, try to do them weekly, really. And they're just, there for the trading community to get an opportunity to interact with us, interact with other traders in our community, look at some live markets, maybe find a trade, all that stuff, and move you toward positive expectancy. But before we begin, always a reminder of risk. In markets, there is very little that we have control over. It's always a good clue. Anybody who's like, oh, we're going to go to that price, which I have to be careful because sometimes we're like, hey, we're likely going to go to that price. There's a fine line between having an edge and belief in a short-term target than a much longer one. But I can guarantee the thing that we can control is risk. Right? We know how much we're willing to risk and where we'll put that on. So always be mindful of the risk, especially in futures. You can lose more than your initial investment given the leverage. So be careful about that. Also, a question that we get, what are profilers? What do we do? What are we doing? What are we not doing? How's it differentiating? Well, really, we're behaviorists. We are looking at how the auction is behaving. We believe that the markets are an auction, which they are. It's just like a housing market. It's a two-sided auction, just works in very similar fashion. Fundamentalists interpret balance sheets, so they look at earnings reports and economic releases, and they may look at retail sales this morning. Technicians look at price patterns and so forth, and really we look at not necessarily what prices, but how are we behaving at those prices. A couple introductions. I'm Josh, founder of Trade with Profile, and along with me is JP. So if you ever have questions, we're the guys to reach out to and move you along. And we are as Trade with Profile, we're a skill development firm. We're great. If you ever, have a friend or somebody who's like, I've been in markets, been doing this a while, I've been slugging away, I'm just not consistent yet. Or, they're trying lots of stuff and they just don't know how to shorten the curve. That's what we exist to do, is we exist to help shorten that curve and get you to consistency and get you to a place where then you can build on it beyond that. But if you're not yet consistently profitable, we using the profile approach as our bedrock, to help understand the auction, we then enhance that, and we do that through something called our profile trading development pathway, which is a 4-month process, which that right away disqualifies some people who are just like, well, I want to figure out the secrets of the market right now. It's you're not going to explain it all in like one call. No, it like anything worth doing, it takes time to develop it. But we can shorten that curve by focusing on 3 objective areas. And this is if I was going to give you a hint of where consistency lies, or consistency lies, it is at the overlap of these 3 fundamental ideas. Is that they're really just 4 behaviors observable in every auction, and you need to know how to observe them. There's a beginning, there's a move, there's rest, and then there's a test. That's it. There's 4 questions to ask before entering a trade, like before you put the trade on. Like, what is the opportunity, and why do I believe that that's a valid opportunity? What am I willing to risk for that? What would tell me that I'm right? What would tell me that I'm wrong? And there's 4 stages of auction competency, and you need to know which one you're in. Am I at unconscious incompetence, meaning I don't know what I don't know? Or am I at conscious competence, which is a stage 3? I know what I know, but it's not instinctive yet. That's stage 4 competence. And as you're moving along those, knowing which one you're in can help further your development process and know when to press it. So everything that we do each week is expressed through something called our trade plan, and that's where we take all this stuff and we put it into action every day. We look specifically at a couple futures products, specifically NASDAQ and crude oil, and we express that in a plan, but it's really just putting into action all of the concepts of this 4-month process. But one aspect of that we're going to talk about today, because it is a whew, I'm kind of getting tired of it.
Yeah,
but
kinda.
But as those wiser than us have said, and it bears repeating, you trade the markets you have, not the markets that you want. All right, you trade the markets you have. So that means you have to adapt to the conditions that you're in, and if you don't like it, like either adapt to it or do something else. But the market is not here to bend to your whim and give you the trade that it wants. The market is to provide opportunity through price advertisement, and then you as a trader need to discern how can I leverage that. And specifically, since we're in such a news-driven market, what I want to do is I want to look at how do we see news in the market, how do we see it in the profile, how do we think about it, and how do we use that. Just a couple ideas, and actually in a couple weeks, we're going to spend a whole week with our trading community looking at macro news events. But since it's the world that we're in, it bears looking at. So I'm going to just reconnect here real quick to my workspace. Come on. And we're gonna look at some new stuff. Anybody else been experiencing some fun around these news events, or maybe it's just me?
Yeah, I don't know about fun, but Crude just had a major spike on it.
Yeah. So I think that's one thing to notice when you see large moves. So let's look at this even on a 5-minute basis. A good idea to know when you have a news related event is when you get just unexpected outsized movement that's really outsized of what you would typically see in that specific period, and creates in the profile what we call poor structure. So for example, right here, there are what we call single prints in the profile. So the auction was doing kind of its thing early on, and then you can see right here, really big move. When we zoom in here, we're going to see some other things. One, I want to look at what we call delta numbers. So delta is the difference between volume of trades placed on the bid versus the ask. All right, and so you can see like we've had like 26, 14, 119, 494, 1192, well, it looks like 123 and 306, but this is the really big one. These two combined is where we get the move. So I don't know what the news was, but there's a catalyst. And here's the thing: the auction actually behaves in a very behaviorable or very consistent and predictable way. It auctions from value references to value references, and we define value by an accumulation of price and volume. This 57.20 in our trade plan this morning was a big level. Why? Because that's the most traded price of the last week. It's the most traded price of the last month. I think it's the most traded price of the last 3 months. So there's a lot of queued up interest there, and we're anticipating a move. But for an auction to make a move, you need a catalyst. Okay, so the structure is there first, and then whatever news event comes out. Now, once a news event comes out, there are a couple useful references. So one is specifically this spot right here, and what I'm marking is I'm marking what I call a site of origination. So when you have a news event, you just look for where did the real massive activity take place. Okay, and then the question is, well, how do we interact with that price? How do we spend time? Because what's happened is new information has been introduced in the market. Now the auction has to do its reassessment of value, because when new information comes into the market, it upends the perception of value. Outside of a new catalyst, the auction will just move back and forth between predetermined value references. But when you get a catalyst, all of a sudden that changes, and it has to start again. So in this current news environment, it's actually not a bad idea, given that we're getting so many of these catalysts. Like typically, if you're new to trading, typically we might see 1 to 2 of these a week, if that much. I mean, would you agree, JP? Like, and they were typically planned, like around a planned economic release. Like we didn't get necessarily like flash. I mean, this is like within the last 2 years is really metastasized, especially with the advent of the trade war, where tweets have become an impactful news release. or algorithms that are reading news releases off a Bloomberg terminal and then are triggering. And that's where a lot of this stuff's coming from, is that some news flash comes through and Bloomberg terminal kicks in and everybody tied into Bloomberg grabs it and they're off to the races. As a discretionary trader, I don't know when those things are going to happen. So I'm completely powerless to that. What I can do is I can say, all right, now that there is one, I now have a reference. And so the reference here is, hey, I've got this really, really strong buying site of origination. So buying and strong activity should get follow through. Think of it like momentum down the interstate. It should get higher prices. So in fact, this actually should even lead to higher prices. So I would be foolish, in my perspective, it would be foolish, especially as a short-term directional trader, to step in front of this. Why? Because we've not even come close to where this was, and all the numbers are pointing. I mean, there was a little bit of pullback, but this did not overtake the volume in the buy. So that is just a pullback, and they're likely queuing up. I need to see this thing really exhaust, so it can be helpful to know, hey, not yet. There is opportunity today, in that there's quite a bit of divergence between price and value. But the fact that we came in today at value on multiple time frames means that this could be the beginning of a really big move. So unless they trade back through that side of origination, my bias is to go and find opportunities to go in that direction and towards references in that direction. And will remain in play until they either trade back through this really quickly, or we go up and exhaust, and I find them running out of steam, that then I could take a safer counter trade. So just the first thing, and this is the first tip, is that anytime you see really impulsive activity, the first thing to do is mark the reference. Start there and notice, just watch the follow through on the auction after that. If it swiftly trades back through that site, then what you've done is that all the programs, because to be this fast, this is not human trading. The programs that jumped on this news, they have risk parameters built into them. So if they don't get enough positive excursion with them, fast enough, then what's going to happen is that they'll kick back out and sell. So if this doesn't get follow through, all of this activity will be trapped if we trade right back through here very quickly, and then that can set up a move back toward at least the 57.20, if not lower. Because what's happened is the auction has found out it could not go in the direction it was trying to break. We have another one overnight in the NASDAQ, which this has been kind of the case. And let me expand the profile here. It's actually backwards. It just kind of helps me see the difference between overnight and the RTH. But you can see early balance and then big move here. Again, what we call poor structure. So it's identifying an impulsive activity in the auction, and that represents buyers that are still there until they're not. And that led to excursion all the way up up here. Now we're finally making a lower low on a 30-minute. So it's saying there's enough sellers willing to challenge this prevailing movement of one time framing higher. But you can just see how an impulsive move, even overnight, unless you just trade right back through the base of it, can continue. And so those become references. Notice actually that a couple times overnight we came down here and tried to test this 85, 86, 87 area and couldn't get above it. Like the buyers kept holding it up and they kept buying. So really, unless we get back through that, the buyers are still here, also represented in this gap, which we define gaps as full RTH range to full RTH range. And what does that mean? That means that there's directional conviction in the market, likely charged by some type of event. Kind of cool. Now that we have a lower low here on the 30-minute, I am going to look for opportunities to rotate higher to trade for 82.99. So I'm actually going to start looking at a shorter time frame here. It is OPEX today. We have options expiring On the equity side, we do have a scheduled Trump speech at 2 p.m. Eastern. That it's not supposed to be about trade, but somebody's going to ask him about trade. Another thing to bear in mind, and I'll pull up this other chart that shows it. You know, in a algo-driven world, it's not a bad idea to have on your daily charts to look at VWAP, volume weighted average price, and 2 standard deviations of VWAP. Notice, just go back and look. We can go back several years. If you look, anytime that we press through 2 standard deviations of VWAP, the programs will kick back a little bit. So, you know, when you're up there, at the very least, the key takeaway is do not buy it. You know, or if you punch below, don't sell it. It's a great way to get trapped. As the auction, you know, may have to trade sideways to keep the slope going that way. But so that could also be kicking us back now that we're above it for both the ES and the NQ. So even though they were pushing higher today, I was kind of like, yeah, they're going to struggle. All right, come on, give us something to lean into, huh?
Yeah, part of the what Josh just said is just making sure you don't get trapped. Okay. Sometimes they move these things so quickly and you're like, oh, it's going away from me, and you just want to get on board, and about the time you get on board, it's about the time the other side of the market starts coming into play, and just got to, you know, be very cautious of that.
Yep. All right. Well, that's the primer. If you guys have any other questions about news events, we'll love to hear them, but we're also just any questions in general as we look for a potential opportunity to short the NQ. So I'm looking for a little bit of a fade here. I still got, you know, price to value divergence, although I notice we're building some volume around 83.10, which could become the new volume point of control, and that would remove the opportunity that I'm looking for, which would be a bummer.
Yes, that would.
Session VWAP's at 8,300, so I mean, at least there's some divergence there, and we're back inside that IB. So
what do you have for volume POC right now?
VPOC is at 82. It's the same as the VWAP.
Really?
Yeah.
Huh.
Yeah, I got VPOC at 82.99.
Okay.
That's this yellow line right here. And then the RTH VWAP is right here at 83.07, but the full session VWAP is 8,300. Which I'm thinking here. Let's see. Let's just look at the deltas here. Pretty good selling delta in this period. So these are all positive numbers. Overall for the day, we're at 700 to the buy side, and cumulative, that's this number over here at 36.05. So we were up at 5,000. So we actually have found some sellers to come in and shut this off a little bit. That's good. Good trade location today would be, you know, anywhere up here in the lower volume areas. And I will look for fade unless we get above 83.31 and start trailing higher, and find some new buyers. I'm going to keep looking for moves lower. Now notice here you go. VPOC just moved right here to 83.10. So tough. I mean, we could still trade down to 8,300 and then re-migrate it lower. But tough day today. Not the best day to trade. Similar situation in the ES. Although a little bit better divergence there between price and value. But you can see here, like VPOC is down here at 3106 on 20,000 contracts. You just need 5,000 contracts more to move it here to 3112. And they are, I mean, ES is still one time framing higher. Although interestingly, you see this, JP, the RTH delta is negative. They had a lot of sellers on that first 30-minute, but still not enough to turn the whole thing neutral or. Hmm. All right, cattle is into my area where I'm looking. I was telling the gang earlier that it's a really, really big day here in cattle. So there's a big move. So that's kind of a site of origination. Responsive activity higher, unless we just trade back through this price. I'm still looking for the next leg down that would actually get at least here and lower. We do have lower, IB low today. So now I'm just kind of looking for an opportunity to be in. And
I got to ask you, did you guys hear my explanation to Milton on his question, or was it I was talking to myself here because I noticed I was just on mute?
you were talking to yourself.
Oh, that's lovely. So Milton, great question. Poor lows. Yeah, we do watch for those because they like to get cleaned up. That doesn't mean they're going to get cleaned up in one day.
Yeah.
But it does mean they will get cleaned up someday.
Yeah.
After the poor lows this morning, I was like, wow, they could bounce this and roll it back over. I actually got a little short coming back into the overnight volume profile, and then got stopped for a little dinger because I was actually doing just that. I was looking for those poor lows to get taken out, but no dice. So
Yeah, they're definitely. We actually spent a week looking at poor structure, and this is what Milton's looking at here. There's A and B period. There's no excess to the downside. See, like here in D and E, there's about 5, and I think I have this on 3 ticks a TPO. But there's what we call selling excess up here. So that means that anybody up here was buying at poor prices, couldn't get any follow through. We don't have that down here. So that says that this is a weak low, and could get run. And I think largely there are some stops down here. Obviously, anybody who bought after the initial push higher on the news saw it defend. There are stops down here. So although unlikely today, we would need a news catalyst. It's only about a 30% chance that we trade below 82.99. If we do, then expect them to clean up this poor structure. Otherwise, we just carry it forward. And the hard part on poor structure is the push past it. Like what are you expecting out of it? I mean, you're really just expecting that it goes past it and it cleans up the fact that there's a poor low. So that's why we use, like the target I'd be looking for is really I'd be looking for a return back to 66. Like that has far more predictability of it around than cleaning up a poor low, because you could get 2 ticks below that low and you've effectively closed the poor low. It's kind of like if you ever heard people say, all gaps fill, and so like they'll see a gap and then they'll sell a gap, and then have the trade run against them for weeks.
oh gosh, yes.
So yes, it just doesn't mean today. It just means, is it possible? It's unlikely. Oh wow, Roger Stone has been found guilty of witness tampering and lying to Congress.
Shocker.
Shocker. It's a reference to carry forward. What on especially on poor structure, whether it's single prints, whether it because essentially not only the poor low here, but also these single prints and Globex. Those are very rare occurrences, and there is a potential that if we get through here and get closer to it, I'd be looking for a trade at least down to 82.73, what we call a structure cleanup trade as a target. But again, it only pulls as a magnet the closer you get to it. I do like this though. I like that we're basically trading back through half the range.
I do too.
So not a good chance to trend today.
Nope. Like to see him go back up in that 83.10 area and then just say, nah, we're going to go down and just crank it down.
I might.
That would be a dream. A dream.
Just might. Yeah, I gotta see ES get below this 31.11. But I think they're gonna clean up those singles. Like the boss they are. What's the rest of our indexes doing? You know, Russell has not been participating in this
Nope,
stuff.
not one bit.
That's the canary in the coal mine, gang.
Yep.
While everybody else is pushing to new highs, here is your Russell 2000. Yep, looks very, very directionally convicted.
Going sideways still.
Going sideways.
Put in case, let's see, in this case, we have poor lows.
Yeah.
It'd be high broken. How do you decide bias? My guess is value. Well, I mean, it's a type of day makeup that helps us with bias and stuff. So how the day, what kind of day is it on the profile? And that, are we trending? Are we, are we going to be a balanced day? I mean, right now we could just rotate the rest of the day. End up being just neutral today. What's your thoughts, Josh, on that?
Yeah, I mean, really simply, I mean, it's still the buyer's auction to lose.
Yeah.
So now I'm looking for them to fail, given where we are in relationship to our value references across multiple time frames. I mean, any price higher is possible. We have a gap, that's bullish. We've extended the IB high, that's bullish. So, unless some of that stuff starts to change, it doesn't mean that I'm not looking for a short, but I'm just like, I have a very, very small target that's reasonable given, the bias of where we're at. So for me, it's the buyer's auction to lose. Now I will not buy today just because we're above value for the last week, which is above value for the last month. And in that scenario, I just don't go long. It doesn't mean that it's not valid. And you have some really, I think there could potentially be opportunities, if we trade down to 8,300 and find some buyers, you would be wrong if you trade one tick below the IB low, definitely, because that would shift the bias. My bias intraday always goes with whoever is the last person to extend the IB. That's who's controlling the auction directionally. So, unless that happens, and that would be what we call neutral behavior, it's still the buyer's auction to lose. But if Trump comes back and says, I'm not gonna delay the tariffs, I'll see you at 66.
Yeah.
Or 52.
Yeah, that would be an interesting thing. That's for sure.
All right, let's go back here and look at this. Absolutely. Hey, thanks for the questions. So again, here's our. In fact, let's mark this. Let's put a reference line here so that we can keep an eye on this price and see. Let's just keep watching how we interact, especially right here. So I'm going to put a reference, an area of interest here. Okay. So that's the push. This is just pullback. This is not a turn. Okay. Unless we trade right back through this 57.41 zone, this is likely just a pullback, for the next push higher. I wouldn't even consider looking to fade this unless I got new highs. Or if I can push through this scene here, then I could, look up, I could define a little bit of a range to look for rallies to fade. But similar thing, here's poor structure, here's singles, right? But I'm not finding the sellers. I'd really want really strong sellers that could stick before I'd even think about countering this. At the same time, it's hard for me to go with it because you've already moved. I mean, we're outside of the expected range of the product. We're way more than 2x the initial balance width. So, could it move higher? Sure could. It's going to do it without me.
And sometimes you got to let that happen, or you really do.
Sometimes you got to let that happen. That's right.
Yeah. Listen, the one thing you got to get away from in trading, if you're going to be consistently profitable, is you don't, first of all, you can't be right all the time.
Right.
Second of all, because the market's going one direction, right? Now, like Josh talking here with, oil. Yeah, could it go higher? Absolutely, it could go higher. It's going to go without me as well. The trade was not up here. The trade was way down below. Actually, the trade was on the IB break. And so, it's one of those things, you miss them. And if you've been here any length of time, you've heard me and Josh talk about you have to let that stuff go. You're going to miss trades, and that's just part of trading. And there's going to be thousands and thousands and thousands of trades, and that's just you don't need every one. For one, you can't get every one. You'll drive yourself nuts trying to get them. Wait maybe another day, maybe another couple days. It just depends. So yeah, I'm not gonna, definitely not gonna try to go with this one. It'd be crazy.
Yep, tough.
I'll let somebody else get stuck.
Tough day. Let's
There's
see
not much going on.
If anything else is moving.
Euro's
moving a little bit.
So they're buying a NASDAQ again. This is why
we
didn't try it. Here's a great example. We start to see some selling in the NASDAQ and why you don't chase it down. So
yeah,
now you're underwater.
That's right. Yeah. Sometimes the auction does what it has to trade. It has to trade lower to pull value higher. Right. So that's what they did. They traded lower to pull value higher. Still presents the opportunity that if I can get up here and see some failure, without pulling value higher again, then there's opportunity, good opportunity. And the fact that we've come back and traded through half of this range says, which by the way, this is halfway back right here. The fact that we come back to that says very, very unlikely that we would trend today. Now, I say very unlikely. Could it happen still? Sure. It would probably need some kind of China trade catalyst or something to make that happen. We'll see what they can do. Any other products? We always look at futures. If anybody wants to look at stocks, we can do that as well. Or any other. Even if you want our take on a product that you're looking to trade, happy to do that. I know a lot. I mean, we cover a lot of products that a lot of people trade in doing the NASDAQ and crude and ES. Man, the Dow is rocking and rolling.
Yeah, I don't know what's fueling this stuff, but here's what I'm going to just caution you about. We're really in an extreme posture right now with regards to the equities, other than the RTY, which is probably our clue and our canary in the coal mine type of situation. But that doesn't mean you blindly short something.
No.
And I'm just going to beg and implore you guys not to do that. I mean, we all attempt it, and we all want to make that big trade, but wow, wait till at least there's a shot over the bow, Yeah. I mean, because if not, it could be painful for you. So
yeah, in fact, let's see, I'm gonna go to the I know a couple products were in extreme. So let's look at Apple here real quick.
Yeah, did Apple sell off? Nope, it's still going, huh?
Yep. So what JP means by an extreme? Okay. So let's just, I mean, here's a market in classic trending behavior, right? Remove clear all references. If I look at this most recent move from really the big swing low from December of last year, and I go up through today. Okay, notice the slope of this profile. Are we getting higher prices? Yes, but as we move higher, what are we struggling to do? We're struggling to really find participants to go with us. Now, in the short term, there's a little bit of inventory at like 264. Let's see, what are we trading? we're trading we're basically like right there, 264.26, because it's just end of day data. So 264.20. So we're like right there. And if they start to go back the other way, these are the prices to defend. And it could be a situation where the auction has to move lower to pull value higher. This right here was the earnings gap, if I believe correctly. But this is an auction that's in an extreme, and if you're curious, like, well, what does that mean, and what do you then look for after that? Well, let's just look at this last move lower. Okay, auction moved higher, balanced, broke from 221, and then it starts coming back and revisiting all of these nodes. And see the move, the little wiggle a couple days whenever it comes back to those prior inventory levels. So that's a thing to expect. Look at the contrast between the February to October of 18 and January to November of this year. The rubber band is stretched much further. I would not expect any difference in the ultimate auction behavior. But there is no, just like I wouldn't buy this. Just like I would not buy this. Just like JP said, there's no reason to I'm not going to short this. There's no selling yet. I want to see him start moving through some of these prices first. I mean, where would I buy this? Man, I would buy it at 220. I would buy it at 204. I think that would be a great place that you could buy it. It's a long way away from where we are.
Yeah. So what do you do? And this goes back to the psychology portion of it. Well, first you go back and study the chart and see where was the right places to maybe the opportunity to buy this, or listen, Apple, if we took this chart and took it all the way back to the early, like 2000, and we looked at what Apple does when it gets on a road going north, sometimes it doesn't come back for a long time. Yep. And so if somebody's trying to do something, and in this case, you're not going to short Apple. There's not too many people that are going to give you the stock to short it. Okay. It just isn't going to happen. They're smarter. The brokers are smarter than that. So what could you do? Probably go to the options market and, sell something, whether it be an outright or a spread or something like that. At that point, you're going to struggle because Apple does move quite a bit every day, every week, and you're probably going to be fighting that the whole time. There's easier ways so you let it go a lot of times, or at least until there's a pause or something like we talked about before. Some type of shot across the bow, which would be what? Well, it would be a lot of selling and pretty clear selling into that marketplace. And then that would be of interest to maybe establish some types of position. But right now we just sit on the sidelines. So it looks like Josh got Microsoft too. So
yeah, similar situation, not quite as stretched here in Microsoft. So you can see that 137 area is actually a pretty nice place if we could get a pullback there to buy that. Or if we saw a selling catalyst, we could use some puts and we could look to target a short-term move back towards that 137. That might be a place to buy. Notice how it came back into this prior inventory zone, and that created the last big move. So I see Tony question about could you encapsulate your wisdom in trading?
Oh my gosh, I'm not sure what you mean. Our wisdom. That's crazy.
Well, I think he's like, could you put it all in like one tiny little bow? That is such a high bar ask. It's really bold. I love it. So
we appreciate the compliment, but
I mean, assuming that there's an assumption of wisdom. That's interesting.
Wisdom, Tony, in this industry is, well, hopefully you will be able to provide some wisdom to you, but wisdom for most traders is through a lot of pain. And a lot of ours comes from a lot of mistakes, and that's the truth.
So. I mean, I'd take a stab at it, and I would say, get at a very, 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 very simplistic level. All of these products that you're looking at, they are an auction, and so at any given time, you're thinking about where is price to value. Do you want to buy something above value? Why would you buy something above value? Do you want to sell something below value? In what scenarios would you ever sell something below value? Are there different perspectives of value? Yes. So what you have to figure out is you have to figure out what is the perspective of value that you're going to most align with, and we define value as price acceptance or prices that have been traded with lots of volume. In a micro sense, like here today, for the day, 8310 is value in the Nasdaq. Okay, so if you're going to buy it, you're buying above value. So think of any other auction, like a house. Here's all the comparables of houses in the neighborhood. Is it a good deal? Will you win over the long haul if you continue to buy significantly above value? No. Eventually what's going to happen is you're going to get stuck, and you're going to get stuck and trapped above value because nobody else went with you, and it's going to be so painful. So if you can be patient and wait for the opportunities, you can try to get a deal, good location, good opportunities below value. So figure out where value is for the time frame that you want to be active, whether that's intraday, whether that's multi-session, and then use that simple rule. Like intraday, I'm going to look to put on longs at or below value. I'm going to look to put on shorts at or above value. I will not sell below value. I will not buy above value. Period. There you go. That's about as simple as I can make it.
Pretty simple, man. I don't know what else you want.
Pretty simple. Yeah. In fact, I mean, even with these, auctions moving higher, like I've made consistent money primarily being short.
Yeah. Okay. Thanks, Arno.
Yeah.
Yeah, we'll go ahead and do that.
Awesome. All right, we got about 15 minutes left.
Yeah. Any question? I mean, anything, guys, you want to talk about? This has been okay. So anytime you have geopolitical issues going on in the world, it just makes a little tougher because, well, you're just not sure what's going to happen.
Yeah.
And I'm sorry, that's just the easiest way I can say it. With that, then we go to, at this point, what Josh just talked about. Wait for extremes. Wait for when we're above and below value at a certain level, okay? Mm-hmm. Then that gives you, we call that the hard right edge, right? Mm-hmm. And that gives you, opportunity. Now, it's got to be calculated opportunity. It doesn't mean that, it's going to work and, and that kind of stuff. But, just what it does is then you can, okay, you have possible opportunity, you establish your risk and you accept, and that's the key, you accept the possibility of loss to gain what you're looking to gain. Mm-hmm. And if you're struggling with that, then there's one of a couple different things that could be happening. You remember, profile, and Josh should tell you this as well. The profile is a tool. It's not a trade plan. Yeah. Okay. You develop your trade plan around some of your tools, and you use your tools to help your trade plan, vice versa. Once you get that and you establish that, and remember what Josh was talking about, you don't know what you don't know at first. Mm-hmm. And then from there, you start to begin and plan. And then at the end, you realize one thing, that you have, unconscious competence, but at the same time, you may be struggling still. And then it goes to the psychology portion of trading. And, that's exactly where I came from at one point. And you have to learn what that one little thing, that hiccup that's keeping you from really taking advantage of the markets. And whether that's fear, what is fear of losing money, fear of being wrong and stuff like that, or just not trusting your setups, and you haven't had enough. You see something that looks like a trade. I'm going to take the trade here because it looks good, and it doesn't work. And next time around, you're cautious, right? I hate to even say this because I've used this analogy so many times. Like the old dog. I grew up in Kansas. It's like the old dogs on the gravel roads, man. You keep doing that stuff, it's not going to end well. Yep. So don't. So what you do is you go through a period of steps. Josh, alluded to it earlier today. It's a period of steps and time to become. This is a skill, by the way.
Mm-hmm.
And anybody who argues that, I'd love to sit down and discuss it with them. That this is not, if they say it's not a skill, I totally disagree. And once you learn the skill and you get out of your own way, and that's the truth, you got to get out of your own way in some respects. Once you do that, then you have a skill set that you can use for a long, long time. Doesn't mean you're going to be profitable every day, but it does mean that you have a great opportunity, greater opportunity that I would think than other people who don't know what the markets are and stuff like that, and they're trying to get into the markets and make a trade. Most guys say, well, for example, I met a guy 2 weeks ago, and I was at a dinner, and I'll tell you this quick story, it's sort of fun. Guy goes, hey, I gotta introduce you to JP. He's a trader too. Oh yeah, what do you trade? And I go, well, I trade a lot of different things. It depends on what it is. And then he goes, what do you trade? And he goes, Forex. I go, oh, this ought to be interesting, right? No crack on Forex traders, but I haven't seen too many profitable Forex traders. So he was telling me all about his trades. And then I said, so how long you been trading? 2 months. Really? I said, and you're trading $100,000 account with 2 months of experience. I said, have you ever traded before this? Nope. I just looked at my wife. Now, my wife was a trader as well. She's not any longer, but I looked at my wife, and she just looked at her and just started shaking her head very slightly. And I'm like, yep, that's going to be a car wreck waiting to happen,
Mm-hmm.
So take the time, get, as like, Josh says, you got to take time, get the reps in, understand what you're looking at. Our channel, the guys in our channel are doing a phenomenal job. I mean, we've had some great breakouts. I hate to say breakouts, but we've had some people really turn it around. And it's really awesome to see. I know Arno's in here right now. He's working hard at it. Is Cody here? I didn't see Cody. Is he here today? No, Cody's not here.
Yeah,
so Cody is one man. Cody has just been on fire. Holy cow! He had two huge trades today. So,
yep.
Yeah, he's doing really, really well. But what they did is they did what just Josh and I are talking about. We go through a plan system. You learn about the profile and how the tool can help you. You learn about the different types of trades within the profile. You learn about value and where it is and how to read it. Those all are integral parts of your plan and how you develop your trade plan. And make no mistake about it, it is your trade plan. And I know that people always say, hey, but just how do I get in and how do I get out? Can you tell me that? Well, your trade plan will help you with that. Mm-hmm. But here's the thing. If Josh and I are out skiing one day and we get run over by a snowcat, okay.
It could happen.
It could. So my question is, how are you going to trade if you don't have your trade plan?
Right.
And I say that tongue in cheek, but let's be real about it. Do you want to do this a long time? And if you do, it would probably behoove you to put a plan together that is your plan, mm-hmm. Not Josh's plan, not my plan, but your plan. We'll help you with it. And the truth be told, it's probably going to be really close to all of our plans because we all trade pretty similar, don't we, Josh?
Yeah, we do.
So anyway, just a little bit of, as who was it that said that nugget? I don't know. Was it Tony?
Yeah.
Some more nuggets for you, Tony.
Yeah.
I don't know if they're nuggets, but like I said, it's just.
Hey, Milton, I see your question about a Black Friday promotion. So we have a Black Friday promotion all year round. And that is that we give everybody 1 free week with us. So, we don't want anybody doing development work with us that, hasn't seen if that works or not. And so, spend a week with us. You'll see what our plans look like. You're going to see a number of the tools. You'll see the templates. You're going to get one of our 16 kind of core ideas, because it's really our process is we spend looking at 16 core ideas one a week for 4 months. So is it going to be complete in that week? No, because it's a 4-month process. So if you think that it's going to, unlock the secrets of trading in a week, you'll be woefully disappointed. And we can always tell. We can always tell somebody who takes us up on the trial week and then they don't go forward is that they expected that we were just going to be having a trade on all the time, and the fact is no, we're like we're like the big cats that like stalk and wait, and we just learned how to wait for those things, and we learned how to read the auction to do that. And it takes time to gain that skill. And if you don't love it enough to give the time to learn that skill, you won't be successful. And that's not a knock on you as a successful person. It just means that trading's not for you. It may be something else that anything in life that we're going to be successful at, we have to love it enough to have the resilience to stick through the hard stuff to get to the good stuff. And that's part of why our process is 4 months. Because I know if somebody cares about it enough, they're going to stick through and work it and do the homework. Yes, there is homework, like, and if they don't do it, they're not going to be successful. But
go figure, the homework, right?
Yeah.
So Josh makes a great point. I'm a full disclosure for me. The first, I want to say something about trading. Most of your time trading is going to be sitting on your hands doing nothing. Yeah. Successful trading is about waiting. I know that sounds terrible, but it's the truth.
Well, it's just the hard part is you just don't know what to wait for.
Yeah, exactly. When you do see that and your eyes are open to that, then it becomes, oh, wow, this is really cool. But it is waiting. Okay, you're waiting for trades that are defined by you and areas that are defined by you that you hopefully want to look at to possibly take advantage of. So that's that's first. And once you learn how to be patient, and full disclosure for me, one of my biggest problems when I was trading many years ago was jumping in too early, trying to catch. Okay, well, we're getting close to this. I bet we're going to go take it out. I'm going to get involved with that move.
Yeah.
Well, guess what? By the time I got involved with that move, they were starting to pull back or go back the other direction, and I would get wiped out. Yeah. Okay. So it's like the guys this morning going down that poor low on the NASDAQ. How many of them thought they were going to take out that low and keep going? Mm-hmm. Whoops, got stuck. Yep. Okay. That's the thing. And I was great at it. I was the best stuck trader there was for a while, and I learned that, waiting was a better thing. And sometimes I would miss. It would make me mad when the algorithms would take off. And I'm like, okay, I'm waiting for a pullback to get involved with this. Pullback never happened. They keep going. Oh, there's a target I was looking for. Gosh darn it. Okay. And that's okay, it's gone. Got to wait, go do something else, put a alert in and get up from your desk and move away from it. It's like, put the gun down, Sonny, mm-hmm. So it's hard. And I'm still tempted by it today. I will be the first to tell you. And I made some of those trades this year? Absolutely, I have. Are they dumb trades? Absolutely, they are. Have I lost some money on them? Absolutely, I have.
Yeah.
Okay, and so it's something you'll always work on. Okay, and I've been trading for a long time. I mean, we're talking, I'm working on 17 or 18. I gotta go back and look at that. I don't remember how many years it is, but it's still there, guys. And so that's the hard part. Even though I could probably analyze markets in my sleep right now. It's no problem. But it's just one of those things. It's like, okay, so this morning, I'll tell you my trade this morning. We went down, made that double bottom, poor low, pull back into the overnight volume area. I wanted to get short, got a little short there, identified my risk, got stopped out. Okay. Was I not happy about it? Yeah, I don't like taking losses on Fridays, but it wasn't. But I took the IB break on crude oil today, and that was a beautiful trade. And so I'm green for the day, and I'm done. So 2 trades.
It's good.
They don't all work out.
They don't. Last comment here on news-related moves or big moves like this. Here's just affirmation of, even though statistically crude is stretched for the day beyond expectation, we're way past 3 times the IB. We've got poor structure, but look, They pulled back, and now we've got a new place here where big buyers are coming in. So, would not even think about countering this until I see us either trade through one of these or, get up here and find selling that's as strong as some of this recent buying. That can keep you out of a lot of trouble on these news events by just kind of noting that behavior. All right, gang, have a fantastic weekend. For those of you who want to join us next week, go ahead and sign up for the trial. We start everybody on Sundays, and you'll get some orientation material on Saturday in prep for Sunday night, and then we'll be into next week. I don't remember what
do we got next week. I got to take a look at that. I usually look at it around mid-morning here.
Yeah, we'll have to see what kind of news. We're past earnings. We don't have. I think we have a fair bit of Fed speakers.
I'm looking right now here. Oh, the Fed heads are out on the trails. Yeah, so we have a couple Fed heads out next week. We do have the FOMC minutes out on Wednesday. And Philly Fed, consumer sentiment. I don't see anything besides the petroleum status report. But,
yeah. So that means we got headline risk for China stuff, because that was actually originally supposed to be signed next week.
Last week, you said?
No, next week was supposed to be the signing. That's when they were going to meet in South America and do the phase 1 deal.
Gotcha. Okay, so that most likely. So we have to be heads up for news events. So, So what does that mean? If you do have a position, make sure you have a stop on.
That's right. Fantastic. All right, gang. Great session. We'll talk to you next week, and have a fantastic weekend, and trade well.
All right, take care, guys. Have a good one.